Good morning, Armor Insiders. Welcome to the morning meeting. Good morning, everybody who's joining us today on Wednesday. This is kind of like open mic Wednesday. You guys can ask any questions you want, throw it into the comment section, and I'll cover it before the end of this morning meeting. So welcome to our virtual hedge fund. This is our morning meeting, getting ourselves ready for the trading session, both to trade and to invest. We're going to go over our 4 portfolios. We use components of all 4 to manage assets here at Rosenthal Capital. So before I dive in, remember, whatever I share, whatever you hear anywhere for that matter, it's your job to be a portfolio manager on the desk, to think like a portfolio manager, to figure out your risk tolerance, to figure out your goals, to figure out your strategy, and then just execute that. And so it's my quest here to share information, share what I've learned from 35 plus years of doing this, and help you become the smart money. Stop chasing people who pretend to be the smart money, trying to follow what they do, and get yourself educated so you can be the smart money and execute your strategy and come up with a risk-adjusted rate of return that you're comfortable with. Okay, so that's what we're going to be talking about today. I like to start with our algorithms for trading the indexes. Call that our macro fund. 8 out of 10 stocks follow the market. We have a simple strategy of following 10 assets indexes, 10 indexes, that when we see these 10 move in the same direction at the same time, it's the footprint of large institutions. Institutions make markets. 8 out of 10 stocks follow these markets. So before we make any decision to make an investment, oh, I love this idea. Oh, that sounds good. Before you even begin to look at hitting the buy button for an investment, you've got to know which direction the wind's blowing from an institutional overall market perspective. That's kind of step 1. 8 out of 10 stocks follow the market. We've got to know the direction of the market. And so what I share with you, proprietary algorithms on these 10 indexes, and we break it down into something very simple. It's either risk monitor green, have at it. Let's go look at our favorite stocks. Let's go find which ones we want to invest in. Risk monitor yellow, probably not a great time to put a lot of money to work, but you can take your shots at some of your top shelf names if they set up. Risk monitor red, as the name suggests, something's really wrong with the market. And now's the time to be more concerned about protecting capital than whether or not you miss the stock that's going up. So those are the 3 light colors. Right now we're on risk monitor yellow. The market's either making a top, flips to risk monitor red, and we get a breakdown, or the market's consolidating and getting ready for the next leg higher. And we don't know which it is. And I know it's like the national pastime of analysts all over Wall Street telling you their projections of where the market's going, and they're sure it's going to be this, that, and the other thing. And we do not participate in that ridiculous endeavor. They don't know where the market's going. The smart money, they throw out numbers. They market those numbers to get you to look. The market goes up most of the time. What is it? 80% of the time the market goes up. So you can easily make a name for yourself. Let's say like Tom Lee. Throw out these crazy numbers where the S&P is going. The S&P may drop 50% first, but eventually it will get there. And then you can tell everybody, hey, look, I told you it was going to go to that price. I find that information worthless. So I don't participate in that. And what I say on this desk is read and react. We read and react to price action. We don't have to guess. We don't want our ego to get involved. Oh, I thought this was going to be the price. It's breaking down, but I have to hold on to it because I'm sure it's going to hit that price. I don't want to see my net worth drop 25% first and then hit the price. That doesn't work. So we're going to read and react. Risk monitor's yellow. We're waiting. We have investments. We're putting capital to work. But we have what I would say is a more conservative portfolio right now. Not because we guessed that we should do that, but because that's where the ARMR algorithms have highlighted opportunity for us. And so we find a portfolio full of utilities, tobacco stocks, AT&T and Verizon. We've owned those stocks for a while. We find our portfolio full of material stocks, precious metals. These are things that don't follow the risk monitor. They might actually sometimes be contrary, right? They're the opposite. Risk monitor's red, those stocks go up sometimes. So we don't guess on this desk where to go. We have, a rule. Best chart wins. We have a whiteboard. Go to our website. You can see our portfolio every day. I share all the entry points. These are the stocks we own. These are the prices we bought it. This is the date. This is the stop. Take it out of the portfolio if it closes below that price. This is the target where it may go, but we have a stop strategy. We trail our stop on the way up. Sometimes it gets to the target. Sometimes it doesn't. Sometimes it blows through it. And on that portfolio page, I have my whiteboard. Or actually, it's a different page, just a whiteboard. I break it out for you. So you can see what are the top names on the whiteboard. I'm going to share with you. I think there's 6 names right now that I call top shelf names. If I ever get an ARMR algo entry point into one of these 6 names, I'm buying the stock. I don't care what's going on in the world. They're top shelf names. They're the names I want to own. When I get an entry point, I own them, and I make them a max position size. So the largest position size in my portfolio. I run different styles of portfolios. I manage my own capital. I share that with you, and I manage capital for investors. So max could be different for different people. I have some portfolios where max is 20%. Max is 10%. Depends on the situation, portfolio. You have to figure out your risk tolerance. You've got to figure out your goal. You have to execute your strategy. But I'm going to share with you these 6 names. These are names that fundamentally, I think, over the next X amount of months and years perhaps, are going to be huge stocks or going to continue to be huge stocks. I'm going to share a couple names. You're going to say, well, we already know that. That's okay. I want to stay on those names. Every time I get an entry point, I want to be on those names. And I want to trade around the core of those names. So sometimes I hold a minimum position with a much more lenient stop, and I trade a part of the position at a more aggressive stop. We trade around the core. So I'm going to give you those names. You can put them down, do your own research, figure out what you think. We're going to get to the highlighted stock of the day today. Stock we added yesterday to the portfolio. We're leaning into our precious metals exposure. Added 2 names yesterday, one of which I'm going to highlight. I'll share both of them for you. I'm going to highlight one. And then, of course, if you have any questions, just put it in the comment section. I'm happy to answer. So let's dive in. First of all, we're looking at the ARMR algo for our risk monitor. We're on risk monitor yellow. We have been since right around in here, which is, what is this, the 12th of August. Markets made like a little double top, broke down yesterday. But one of our portfolios, all we do is trade the S&P. So we sleep on a bed of treasury bills. Every night, all I have is treasury bills collecting interest. I come in every morning. I look to take advantage of weakness. So when the market gaps down yesterday morning, instead of being concerned about that, I begin to salivate over that. Like, that's fantastic. Market's down over 1%. I ran hedge funds for a year. I run a virtual hedge fund now, or you could call it a family office, right? And so what I do with the family office, I got all 4 of these portfolios. Everything I share with you, I own. This strategy is a certain percentage of the entire portfolio we're running. That means when I'm max long, I still have a cash allocation every night. Maybe it's 25% of my total assets. 75% is invested, 25% in cash every night. So when I come in the morning yesterday and the market's cratering, instead of being concerned about that, that's opportunity to me. And so we had a beautiful trade yesterday. This is a 3-minute chart you're looking at. Blues up, reds down. Black dots are the VWAP. All of these lines on the screen are part of our algorithm we use to trade. So it gapped down. We waited. It set up an ideal bottom right around the 635, 636 area. We got long right here, and we captured, a fairly large gain. And what I'm doing there is I'm using triple the S&P to trade. So I trade SPXL. I put 100% of that portfolio to work, which is 300% upside. We have our exit strategy on the way up, booked our profit, had a great day. So if we then pull out and see, what did it look like yesterday? So it looked like a big down day yesterday, but when you look at the daily charts of the 5 of the 10 indexes we follow, S&P 500, NASDAQ 100, weighted, small caps, then we have the weighted, the equally weighted S&P and the Dow Jones, right? There's nothing that really happened to the chart patterns. It's just a pullback to support. In the case of small caps, it's above support. Equally weighted S&P is a little bit below support. Dow is right on support. So it continues to be risk monitor yellow. There's no direction yet. It's either a top that's forming, breaks down, it goes red, we end up raising a lot more cash, or we hold in this uptrend, which has been a significant uptrend this year. And this is just a nice consolidation before the next leg, higher risk monitor green, and we get more committed. And we might change our allocation a bit, all right? So moving over to the stocks we added to the portfolio yesterday. So we bought these stocks yesterday. We're already long precious metals. This is our precious metals screen. You can see this is Sprott Physical Gold, top left corner, just blew out a beautiful pennant formation. Sprott Physical Silver broke out of a high tight pennant. And then you see the silver stocks and the gold stocks as expressed by SIL and GDX that are, kind of going vertical. So we own already some names like Franco-Nevada and Royal Gold. And I know throughout the capital structure of ARMR Insiders, they own many more names. I mean, there's guys that are out there. We own Newmont. Some guys are out there in Barrick that's blowing out. So I rotate into some of the names in the big cap that have yet to blow out. And I think Franco-Nevada and Royal Gold are there now. And then we added our basket of small cap names, micro cap, small cap, over the last couple of days. And that's things like Discovery Silver. You can see these charts are blowing out. I-80 Gold, Newfound Gold, Skeena Resources. You can see the patterns that are breaking out in here that we own. We've already doubled money in Tower Hill Mines, and it's just blowing out in here. We've actually increased the size there. And then rounded out with VZLA, breaking out of that beautiful pattern too. So there's a handful of small cap names. So yesterday what we added was Freeport, McMoran, copper and gold and silver. A lot of exposure to Indonesian copper. Perfect downtrend. This is kind of like your go-to copper play. There's the shakeout and the breakout. I love shakeouts below key moving averages and then recoveries back above. I like to buy that recovery. Shook out the weak holders, and then the buyers are in control. Here goes the breakout. And the highlighted stock of the day has to be Sprott as an investment company. So you heard me say Sprott Physical Gold, Sprott Physical Silver. We've been Sprott owners. How about Sprott Uranium Trust? We love what Sprott's doing when it comes to materials and the precious metals. And for a long time, we've followed Sprott as an investment company. It's kind of off the beaten path, smaller cap, hasn't really traded well. So we kind of avoid it. We do our other things. But it looks like institutions are coming into this metal space, material space in size. And there's a flood of capital coming into Sprott. And so what you have here, I just wanted to highlight this today, is a classic wave pattern unfolding. Here's the base in Sprott. So you can see this perfect base. This is the blowout, stage 1, just an absolute rip. So everyone's waking up to the fact, and maybe we should take a quick look at the weekly chart of Sprott. So now you're looking at an O'Neill chart of Sprott. This is the weekly chart of Sprott. Kind of doing nothing for a long time, just kind of going sideways in here. And now it just started the weekly move. So when we drill down into the daily chart, wave 1 up, then we put the Fibonacci retracement sequence on it, and it pulls back right to the 50% retrace line with an ideal reversal. Break down to the 50, touch it, immediately reverse back up, and yesterday was the buy day for us as it took out the 50-day moving average again. Now, every time I talk to you about stocks, anything I'm doing on this desk, everything comes with a stop. I don't fall in love with anything. If I buy something yesterday and it reverses today and takes out the low, I'm gone. The best stop, and I've spent years analyzing stops and working with all types of optimization techniques and everything. And I'll tell you, here's a gift. I'm just going to gift this to you from all that hard work. Okay? All that work in the trenches. The best stop is always the low of the day I'm buying. And it makes logical sense. If I have an algorithm that tells me when to put money to work, it's not a crystal ball. It's a probability algorithm. Maybe it's right 6 times out of 10 on individual stocks. I don't know if that sounds kind of boring to you, but 6 out of 10 is a huge winner if you cut your losses quick and ride the successes. You don't have to tighten the screws on your algorithm and make it 8 out of 10. You don't have to. In fact, if you do that, your profitability goes down because you're missing some huge up stocks. You just have to cut your losses quick. And the low of the day you're buying, if the buy trigger is right, it should never go below the low of that day. Now, I might use weekly stops sometimes. So I let it test the low of the day. I might give it a couple of days, but certainly by the end of the week. So my stops are not hard stops. They're the line in the sand where then I have to make a decision. Sometimes it's the end of the day, sometimes the end of the week. That's the stop price. So anyway, getting back to a Sprott. This is a perfect, I mean, it's just classic. So I had to show it to you. It's a classic wave 1 up, wave 2 down, bottom at the 50% retrace and the 50-day moving average. Wave 3 up should begin. And wave 3 is usually the biggest wave. So whatever you see here is 1. Wave 3 should dwarf this first move. That's the entry point into Sprott. It's the highlighted stock of the day. Now let's go to the other highlighted stock of the day I'd like to chat with you about. And that has to be Apple. On this trading desk, what we look to do every year, one of our favorite things to do, is find one of the Hateful Eight names. Magnificent Seven, but then I like to add Netflix. So it's the Hateful Eight, okay? Those Hateful Eight names drive the whole market. It's something like the top 10 names represent like 40% of the S&P 500 weighted index, okay? So those are the leaders. That's where institutions go. And money rotates like a washing machine in those 8 names, those Hateful Eight names. So when you see 1 or 2 woefully underperform the other 6, I start looking for reasons to buy those 1 or 2 because I know institutional money is going to do the same thing and they're going to rotate into those names. And the catch-up trade is a great reward to risk trade, okay? So last year, we picked it off in Tesla, okay? This was just a no-brainer. Tesla had underperformed all the other Hateful Eight names all year. Trump got elected, we got on this entry point right here, made a lot of money. Okay. So today, actually not today, we started buying Apple. We started buying Apple here in the 105 area. And then this was the 217 area where we added to it here. So started in here in June, added again another entry point in August. This morning, we're going to challenge 240. And what I've said to you back then was from 205 when we started this, it's going to at least 260. I mean, just a simple catch-up trade. It's at least going to go to 260, which is going to test the highs, the all-time highs, just like the market is, right? But as we've progressed, I'm beginning to think Apple is a much bigger success in the next 6 to 12 to maybe 24 months. It will go from a lagging hateful eight to a leading hateful eight name. And I think the reason, and we know today it's gapping up because of the Google news and the lawsuit and all that kind of stuff that ended up being good news for Apple and good news for Google. But the real reason I'm intrigued by Apple is that right now the going comment, research comment is they're missing the AI move. They're not keeping up and all this other stuff. I look at it differently. I love what they're doing. They're not throwing billions of dollars into a black hole of trying to keep up with an arms race of AI development. They're going to go with whatever the best one is, probably Gemini seems what they're going with. And the AI they're creating, that they're spending money on, which they're going to reveal, has more to do with the individual, right? So when we look at Gemini or Grok or ChatGPT, that's a broad view of the world using LLMs to help you. And what Apple's really doing is saying we're going to take AI and make the personal experience for our users enhanced dramatically. Okay. So I love what Apple's doing. And when they reveal what their real execution is for AI, just an excuse for institutions to put money in the stock. The narrative that they're behind will be the excuse for institutions to put capital into the stock. So it starts with technical analysis. It starts with ARMR algo entry point. We use stops to make sure what I just said to you is just a theory. If we go below the stops, we're out. But today we're going to enjoy a gap up. It's going to take us to a new high since we've owned it on the way to, I think, at least 260. I don't like price targets because who knows? It could blow through. It could go to 255 and then go down. Who knows? But somewhere in that vicinity, that's like the easy money. And then perhaps it's something a lot bigger if the AI strategy they reveal becomes real compelling. So those are my thoughts for today. I hope you find them helpful. We'll get our live trading desk started at 9:30. ARMR Insiders, I'll find you out there. Anybody got a question for me, a comment, I'm happy to answer. So one question you're asking me, throw up a chart here of GSVRF. What is that? Got no comment for you on a 25-cent stock. Other than that chart pattern, it looks pretty good. Looks like a cup and handle. On a 25-cent stock, I don't think you can really make a judgment. Okay? Chart patterns don't really work on stocks like this. But it certainly looks like a cup and handle. I don't have any information on that stock for you. Valaris and NE. I do like these names. I mean, I'm on Tidewater right now. Okay? I think Tidewater is a good name right here. And I know that on our desk, ARMR Insider Errors has been all over FTI for a long time. They're being added to the mid-cap index. Stock's going to gap up today. So I do see some opportunity starting to unfold in energy. I'm testing the waters with Tidewater, but those other two names look pretty good as well. You got any other questions for me? I'm happy to answer them. Otherwise, bell's going to ring in 5 minutes. Oh, it's Oh, it's a silver company. Thanks a lot for that. The GS, that chart looks pretty good. I'll do some work on it. GSVRF. I'll take a look at it. Thanks a lot, Swamp, for putting that comment into the comment session and asking it. I'm going to take a look at that one. The chart looks good, and we're buying micro cap mining stocks right now. So, depending on where it is and, what type of asset it is, if you've done that research, certainly the pattern's there. All right. I appreciate your time with me, everybody. I really enjoy chatting with you as always. Gets my own strategy right in my head before the bell rings. If you have any questions for me, you watch this later, throw it in the comment section. I'll check it during the day. I'll try to answer it. If you'd like to join us, either as an Armor Report subscriber or an Armor Insider, either one, you can take a look at armrinvesting.com. And hey, by the way, we're starting a Substack. So you might want to take a look at that. Heads up for that coming soon. And we'll be sharing some information on that Substack, free for all of you to see. To begin, you'll kind of be an area we use to share some of these ideas throughout the week. So coming soon, a Substack. I look forward to seeing you all on the live desk in 5 minutes. Everyone have a wonderful trading session. At the end of the day, no matter what I've said or what you hear anywhere else, think for yourself and be the smart money.